Good afternoon, everyone. So, yesterday we had looked at the calculations of the total cost of a job. We took into consideration any work in process opening balances, should they have mentioned any for any jobs. And then you added that to your direct material, direct labor, and your overheads. And remember, we brought in your applied manufacturing overheads here as well, and we calculated the total cost of a job. Then we also saw in this example that they said to us that jobs 641, 642, and 643 were completed, which means 644 would have been incomplete. So this is how, when we summed up these three, we got to your finished goods figure of 17,010, and your work in process figure would have just been this 5,000 Rand that was incomplete. So we completed that yesterday. Let's continue with this. So the next thing that we're looking at is now determining the profit that would come out of a specific job. So in order to calculate the profit, we know the cost of the job as it stands. That's what we calculated in that table we just looked at. We now have to determine what the sales will be, or the selling price will be, for that particular job. And then it is your normal sales minus your cost of sales to give you your gross profit. So we have this. We need to calculate what the sales will be and then work out your gross profit. So this is example 7.4 in your textbook. You can follow up here or in your or in your textbook itself. So it says to you, we're continuing from the same example. The following additional information was provided. So here they said to you that for job 641, a markup of 50% is added to the total cost and all of the units were sold. For job 642, 95 units were sold and they were sold at 35 Rand each. And then for job 643, a markup of 30% is and all of the unit was sold. So now we need to work out what the sales figure will be for each of these and then subtract the costs. We know the costs, as we said, this is what was given to us in this table, and we're only working with these three products. These were the only things that were completed and can be sold to the customer. And then remember, the information that was provided to us from the very beginning had told us how many units would be produced under each one of them. So they had said to us here, I think this was example 7.3, if I'm not mistaken. They had said to you that these were the number of units that were complete for each job. For job 641, it was 50 units completed, job 642, 100 units completed, and job 643 was 1,000. So 50, 100, and 1,000 completed respectively for each of these jobs. Now I'm going to write that next to them because this is, so all 50 was sold here, 100 was produced here, and then 1,000, I think it was here. Sorry, let me just check that I did take that down correctly. Yes, 50, 100, and 1,000. Okay, so here for the first job, they told us all of the units were sold. So we produced 50 and we sold all of them. For the second one, they told us 95 units were sold, which means that we produced 100. And of this 195 was sold, which means the remaining 5 were unsold. And then the last one, they said all the units were sold, so all 1,000 units was sold. So let's have a look at now how to calculate your gross profit for each one of these. So the first thing we're going to do is work out your sales using the cost of sales that we had already determined, the cost of the job. So for job 641, we saw that the cost of the job was 4,400 Rand. They now told us that we are adding on a 50% markup to that total cost. So basically, we're saying 4,400 multiplied by 150% or multiplied by 1.5. So here you'll see that on the next page as well. They have shown you how to work that out. So that's 6,600 Rand as your sales figure. So here is your sales for job 641. Job 642, they said to you 95 units were sold at 35 Rand each. So that is 95 times 35. So that would give you a sales figure of 3,325. And then again, from the previous page, for job 643, it's a markup of 30% added to your total cost, and all the units were sold. So let's look at the cost of job 643. It's 9,860. So it is 9,860 times 1.3 or times 130%. So that now gives you the 12,818. So in your table at the bottom, and again, you must do this in table format, you have job 641, 642, 643, and here you do have a total column that does need to be included. Remember, I showed you yesterday where it doesn't need to be included. So here in this table, you will include the total column. So your sales for job 641 was the 6,600. You listed all your sales out first, so there's the 66, then 3,325, and then 12,818. So in total, all three of these added up gives you the 22,743. Now for the cost of sales that you are subtracting. For the first job 641, they told you all the units were sold. So basically the cost that we had calculated here was for all 50 units, and all 50 were sold. So that is your total cost. So here I'm just going to say it was 100, and here it was 1,000. Okay, so that 4,400 is going to be your cost of sales. Then for the next one, job 642, they said to us here that 95 units were sold, but we had determined that they told us that 100 units were completed. So this 2,750 Rand is the cost for 100 units. So we need to now know the cost of 95 units because this is the number of units that we had sold. So to get to the cost for 95 units, you would take the 2,750 and divide it by 100, and this is going to tell you the cost of one unit, so cost per unit. And then you're going to multiply that by 95 because this is the number of units that you had sold. So 2,750 divided by 100 times 95. Here's your answer here. So that's 27 Rand 50 times 95. And your cost of those 95 rackets is 2,612.5. So this is what goes into brackets here. And then for job 643, your cost of sales is going to be, they said to you, you sold all of your units. So the entire cost that you see in this table for cost of sales is going to be the cost that goes into that table. So 9860 will be your cost of sales here. So please pay careful attention to that. The fact that they said to you, or they didn't say to you, all of the units were sold, immediately signaled to you that you would need to calculate what the cost was of the units that were sold, and then use that to calculate your gross profit. So here you are taking your sales, subtracting your cost of sales, and that will give you your gross profit for each job. So for job 641, it was 2,200, job 642, job 643 added up gave you that total of 5,870.5. So this is how we calculate the total gross profit associated with a particular job. Any questions? Okay, so before we move on to the next but actually, let's do this first and then we'll look at the additional example that I wanted to go through. So this is something called a job cost sheet. Now, a job cost sheet is where we're literally just entering all the information about a specific job that was put into place by a customer. So a job or an order that was placed by a customer, we will specify that this is the number of units that they are ordering, this is the material that goes into it, the labor, the cost of each one of the material and labor, any overheads and so on. We'll take all that information and we'll put it into a job cost sheet. So this is what a job cost sheet is about. And you will see that there is an example of what it looks like in your textbook. So I'll just show you what it looks like, but we're not going to draw it up. But as I said, this is all the information, the type of information that you would find on a job cost sheet. So it would be, as I said, information about the order from the customer, who the customer is, when they place the order, what they ordered, what the material required is, and the cost of the material, what's the labor required and the cost of the labor, the overheads, just in total a summary of the costs involved in the process for a particular order that was placed. So this is what the job order cost sheet looks like. And you will see that it's a typical way that information is entered when it comes to a specific job that needs to be carried out. And you're also able to use this job cost sheet to also do exactly what we did and calculate the gross profit from a particular job. So it's basically summarizing everything that we've done up until this point in this learning unit. The examples we just worked with in examples 7.1, 2, 3, and 4, it's summarizing it on this one sheet called your job cost sheet. So I don't know if it's reflecting on your side, but it's taking a while on my side. But this is what your job cost sheet looks like. And as you can see, there is a section that is available for you to enter the information about the customer and the time that they place the order, the date that they place the order, and so on at the top. Then you have information pertaining to, like we said, your materials, your labor, your overheads, and so on. And then at the bottom on the left-hand side, you generally have the space available to calculate the total cost of a job, which is adding up the material, labor, and overheads, and then determining what your total cost of the job is and using that to get to your selling price in order to calculate your gross profit. Okay, so this is what it looks like. So I'm not going to go into more detail here. I'm now going to go through an additional example of what we had done just now in terms of your job costing. So this is a question from a past paper, and I have also uploaded it for you to VC Learn. So under your case studies and activities folder, you will find this example. So it's a question worth 25 marks from a previous paper. I'm just waiting for it to load. Okay, so here is the example. As you can see, it's worth 25 marks. So here they say to you that Swing Swing Limited manufactures tennis rackets and the company uses a job costing system. So the moment you see the word job costing system, I said to you yesterday, this is helping you to identify that you are working with this section, and this is what you're going to do. Calculate the total cost of a job using the method of first working out the total cost, then using the markup to calculate the selling price, and then using this to work out the gross profit, and so on. And you'll see the additional questions that come with it. So the job costing system but is very important in helping you identify what you are looking at in this question. Okay, so they say to you then that the following information relates to Swing Limited for the month of April 2017. They've given you the schedule of costs relating to jobs in progress on the 31st of March. Information they've given your opening balances for your work in process. So this is basically saying to you that these jobs, job A33 and job C23, were incomplete in the previous and it complete in the period. So these were incomplete. You're now going to add it on to the costs for the current period and work out your total cost of the job. So then they gave you the costs for April 2017 now. And they said to you that there were 4 jobs, A33 and C23. Important within brackets, they have said to you that this is the number of units that are produced for each job. So 20 rackets for A, sorry, not for A, for job A33, 25 rackets produced for job F5. So we know the number of units that are being produced under each different job. They also gave you the direct material and the direct labor cost. So we're going to use that together with all the additional information. They also said to you that factory overheads are applied at costs. So your direct costs are the sum of your direct material and your direct labor. So you will sum up your direct material and your direct labor, and 10% of that, so times 0.1 or times 10%, will be your factory overheads. Then they said to you that the only job still in process on the 30th of April 2017 was job L49. All other jobs were completed during the month. So here, this job was incomplete, so it's going to be your work in process amount. These were all finished goods, basically. They were completed. Then the total cost of job C23 was correctly calculated at 25,630, and this amount includes applied overheads of 1,410. So that means we're not going to have to calculate the cost of job C23. It was already done. Then they also gave you more information on the next page. They said that sales for job mark F54, there were 23 units that were sold. Let's look at how many there were. There was 25 rackets. So we have to now work out what the cost of the 23 was, because we will know the cost of the 25, not 23. And these were sold, all 55 rackets. To you the actual overhead 3250. Then you also have marketing and distribution expenses that amounts to 4,700 rand for the month of April 2017. And then they have a whole host of questions. They said ignore spoilage as well. So I'll explain that to you just now. It's in the Unit 7 as well. So they said to you in the first question to calculate the costs of job A33 and F54 in April cost of job 33 and F50. You are going to use your calculating the cost of the job as the total material direct plus your manufacturing overheads. And if there is work in process figure, you also add them. You can add it on in the beginning, whatever you prefer. So any work in process open your direct material plus your direct labor plus your manufacturing overheads. So here we have for job A33 and job F54 that we're calculating these. So starting from the top, you're always going to look at, do we have any opening or closing balances? Job A33 had an opening balance for F54. So it had an opening balance for your so here you don't have to do this in table formats. I'm just doing that because it is easier to, but it is advanced. It does become quite easy to work with what figures are going into the answer. So it's your work in process, opening balance, and this is the 3465. Job F54, you can just put in a dash. Then you're going to add on your, I'm just writing out the acronym. So direct material is 400 for job F54, 3,700. And for direct labor, A33 is 50, F50 they applied overheads, they said it is 10% of the total direct cost. So here you're going to remember I said to you the direct cost is made up of summing up your direct material and your direct labor, and then that you must show the working out of this because there are marks allocated to it. So you can say here if you'd like, or you can write it below this. Either one is fine. So for A33, it was 2,400 as the direct material, 450 plus. So plus the 450 for your direct labor and multiply that by 10% or 0.1. That's going to give you 285. The same here for job F54. So it is the 3,700 plus the 690. So these two added up, and that gives you 4,390. So 37 plus 690. You'll work out 10% of that, so times 0.10, and that is 439. That then gives you your total cost of these jobs, which is 6,600 here and 4,829. So this is the total cost of the jobs. Okay, so any questions here in terms of the first question? All right, so let's look at question 2 then. So question 2 says calculate the closing work in process on the 30th of April 2017. So your closing work in process is, remember, the only job that was incomplete, which they said to you from the previous page that the only job still in process on the 30th of April was job L49. So it's exactly the same thing that we had done here in these tables, but it's just working on, instead of cost of finished goods, you're looking at the 49. There is no opening and closing work in process at the top. So the jobs cost is going to be calculated as its direct material, which is 1,300, plus its direct labor, which is 350, plus here to work out your overheads, it's a sum of your direct material plus the sum of your direct labor. So 1,3 plus 350, and you will you will multiply that by 10%. So times 0.1. So that gives you a total cost of this job of 1,008. Okay, so here the total cost of the incomplete job then is going to 1,815 Rand. Any questions here? Okay, so the next question is asking you to calculate the net income for the month of April 2017. So the net income is also the same as your net profit, and here your net profit is calculated by taking your sales minus your cost of sales, and that will give you your gross profit. And then you're going to subtract any other expenses, any operating expenses, and this is going to give you your net profit. So here you're going to look at what was the cost of sales for each different job order. Once you have the cost of sales, you're going to look at what the sales should be based on what they gave to you in the first point at the top here. And then once you have your cost of, sorry, once you have your sales, it's your sales minus your cost of sales to give you your gross profit, and then you will subtract any additional expenses, and this will give you your net profit. So here, let's look at what we have versus what we don't have or what we need to calculate. So you can do this in table format. It is advised that you do so because of the fact that there is so much that goes into it. So here, you're going to draw up a table that has a column for the 3 jobs that were complete. This is your total. So here you're going to have the 3 jobs that were complete was A33, F54, and C23. They told you this on the previous page where they said that the only job still in process was L49, which means that this was out, it was in your work in process. These 3 that are in green here were complete, those. So A33, F54, C23. So those were complete, and then you have a total column at the end here. So I told you that when it comes to this table, you must include that total column. The first thing you're going to do is calculate your sales, then you're going to subtract your cost of sales. This is going to give you your gross profit. Then from this gross profit, you're going to subtract any additional expenses. And from this point, you're going to only work with the total. Okay, so this is what your table is going to look like, and you're going to have, like you saw here, a column for job A33, F54, C23, and then you're going to have a total column. You're going to work out the formula that I wrote down just now for you, sales minus cost of sales, to give you your gross profit. From your gross profit, you're going to subtract any additional expenses, and that will give you your net income. So in terms of your sales, they said to you for job A33, all 20 rackets were sold at cost plus 40%. So let's look at what the cost of job A33 was. We calculated this already in question 1. So you can go back to your answers for question 1, and I'm just going to write it here. From question 1, we calculated that the cost of job A33 is 6,600. The cost of job F54 we calculated was 4,829, and the cost of C23, you didn't need to calculate it because they said to you here the total cost of job C23 was correctly calculated at 25,630. So those are the costs for each of the jobs, and this is the number of units produced for each job. So for job A33, they told you all 20 rackets were sold. So here, this is a cost of 6,600. You're going to use it to calculate your sales figure. So they said to you it's 40% above the cost. So 6,600 times 140% or 1.4 tells you that your sales figure is 9,240. I'm going to put that into the table as well, and you must show the working out of it like I did here. Maybe you can show it below the table, or maybe you can make the blocks of the table big enough so that you can show the working, but you must show the working. There are marks allocated to it. You will not get the mark without the working. A lot of the students are forgetting that, so please make sure to show that. So that's your cost, sorry, that's your sales for job A33. Then for job F54, they said to you that 23 rackets were sold at a price of 290 Rand. So that's 23 times 290, and the sales figure here is 6,670. So 6670. Then for job C23, it is all 55 rackets were sold at 35% markup. So here, job C23 cost 25,630. So it's going to be 25,630 times 1.35 or times 135%. And that's 34,601. So you'll put that in here, 34,601. So added up all three sales figures is going to give you 50,511. So now we have your sales. Let's look at your cost of sales. Wherever they said to you that all of the items were sold for a particular item, then you don't need to work out anything. You're taking the cost as is from what was calculated in the previous questions or given to you. So for job A33, all of them were sold here, and for job C23 all were sold. So whatever the costs were from the previous page, that is what the cost of sale would be. So 66,025, 630. Sorry, not 66,000, 6,600. So 6,600 within brackets here, 25, 630 here. Then for job F54, they said to you 23 rackets were sold. So here, they're saying to you that not all of the rackets that were produced were actually sold. The moment you're not seeing them saying that all the rackets were sold, it immediately says to you that some of them were unsold. So here, 23 of them were sold, and let's look at how many there were altogether. So for job F54, here it is here, they said to you that there were 25 rackets in total. So you can see that here. So basically, of this 25, all 25 were completed and they're ready to be sold. But of the 25, only 23 was sold. That means that the remaining two were complete, but they were unsold. So it's basically finished goods, but they're not sold. So here we need to work out the cost of those 23 items. So you're going to then say that the cost of the total 25 is 4,829. So you'll work out 4,829 divided by 25 to tell you the cost of one item, and that is 193. Sorry, let me just remove that. So that's 193.16. Gosh, what's going on with the screen? So 193.16 is the cost of one item. So this is a cost per unit. And now we sold 23. So we want to know what's the cost of those 23 units. So we multiply it by 23. And that's going to give us 4,443. So this is now the cost that we put into this table in terms of the cost of sale. So 4,443. And now we are able to calculate your gross profits. So when we add up all three cost of sales figures at the end here, that gives us 36,673. So 9,240 minus the 6,600 is going to give you a figure of, so you don't have to do these individually, but you can if you want to. But since we're only going to be working with in case there are marks allocated to it. So the first one is 2,640. Then the next one, 6,670 minus a 4,443 is 2,227. And then the last one, which is 34,030, will give you a figure of 8,971. So collectively at the end, your 50,500 total of, sorry, I can't find it here, 13,000 4,838. Then you need to subtract any other expenses. So you need to look for, did they mention to you that there were other expenses? So the second last point under your additional information said to you, and it's here at the top, that marketing and distribution expenses amount to 4,700 Rand for the month of April. So here it is going to be minus the 4,700 Rand, and you can write down here that this is for your marketing and distribution. So here, this is going to give you a final answer of 9,138 as your net income. 3. Okay, any questions? So then question 4, 3.4 says, calculate the closing balance of your finished goods on the 30th of April 2017. Now, this is the 2 items that I had explained to you here that were unsold. So for job 833, we sold everything. So I'm going to put that into, let's put that in the color green. So we sold everything for job 833, that's done. For job for job C23, we also sold everything. That's also done. For job L49, this is still a work in process. So let's put this in the color purple. So this is a work in process. And in job L49, we hadn't sold everything. We sold some of it. So this job of the finished was not. So those two the cost of your finished. Now work out the value of an expense we did up here. Here, the items, which was the 4,829, and we divided that by the total number of units. Sorry, guys, I got disconnected there. Can you still hear me? Okay, thank you. So it's calculated in the same way that this is this is calculated, and you're going to now take the value of 1. So we calculated that by saying 4,829 was the total cost of all 25 items. This was the cost of 1 item, but now we want to know the cost of 2 items. So we're going to multiply that by 2, and that gives us a value of 386.32. So this is now the answer to number 4 here, going to be the 4.9 divided by 5, whatever answer 386. And then the last one here, well, the last calculation, number 5, it says determine through a calculation where the factory overheads were over or under applied during April. So when we're determining whether your overheads are over or under applied, we need to look at the difference. Here, your actual overheads they gave to you, it was in this sentence. They said actual overheads for April 2017 was 3,200 250. You're now going to compare that to the applied overheads. So your actual versus your applied. Your actual was the amount of 3,250. So let's write that out here. Now for your applied. We already did this in the calculations as we were going along. Your applied overheads would have been for the first job. So for job A33, it was, remember, taking they said to you here, I just want to highlight that, your overheads are applied at 10% of the total direct cost. So your direct cost was the sum of your direct material and your direct labor. So we basically said for job A33, it's 2,400 plus the 450 added up, and you'd multiply that by 10%. So this gave you 285 Rand. That was the first one. So we'll put it in here, 285 plus for the next job, it was 37 plus the 690 multiplied by 10, and that was 439. So here you're adding on the 439. Then the next one is 13 plus the 350 multiplied by 10%, and that is 165. And the last job, you didn't actually need to sum them up because they said to you that it included amount correctly calculated as 25,630, and this amount included the overhead cost of 1410. So you didn't actually need to calculate anything here. So that's plus 1410. So now you're going to add all of those up, and it gives you 2,299. So now you're comparing this this actual value of 3250 to the applied value of 2299. And remember, when the actual is greater than the applied, which is the case here, this is saying to you that we had only allocated 2,299 to overheads, whilst it ended up being 3,250. So the difference between the two, which is an amount of 951, is a negative, so you'll write it within brackets, and this means that we have under applied. The reason is because we had allocated less to your overheads as opposed to what it actually ended up being for the year. So we had allocated 2,299. It ended up being 3,250. So we allocated too little or budgeted too little for your overheads. So the 951 Rand becomes an additional expense to the business, and it's seen as us under applying or under costing. So that's your 3.5. And then question 3.6 says, in a job costing system, what document is used to track costs per job? And this is your job cost sheet that I explained to you just now. Okay, any questions? So this is a question literally right out of an exam paper. So it is a good indication as well of the type of question you can expect from this section. So I am going to stop there and give you a break. When you get back, I'll continue with the remainder of Learning Unit 7. Are there any questions on this before we go off on a break? All right, so I'll take that as a no, and then you can have a quick break. When you get back, we will continue. The calculation for 3.2. So that was your work in process. So it would have been your only job that was a work in process that wasn't completed was job L49. They said the only job still in process was job L49. So this would have been for job L49, the direct material plus the direct labor plus the manufacturing overheads. There was no opening balance for the job, so it would just be the sum of these three. So your direct material is 1,300, your direct labor is 350, and your overheads, remember they said were 10% of the direct cost. So 13 plus 350 times 10%. So this would have been a value of 135. Oh, sorry, not 135, 165. So these three added up gave you 1815. So this was your answer for question 3.2. You're good with that? Okay, cool. So you can go off on your break. We will start with spoilage when you get back. Okay, let's continue. So the last part of learning Unit 7 is looking at something called spoilage. We look at what it is, how to calculate it, and then we look at your last bit of learning Unit 7, which is the ledger account. It's mostly repetitive of what we saw in learning Unit 7. In learning Unit 6. So here, under spoilage, what it is, literal to the words, is where we face a situation where some of the goods that were produced in a particular month or period of time weren't fit enough to be sold to the final customer. Now, so far, in all of the calculations we've done, we've just assumed that whatever was produced was all sold off to the customer. There were no goods that were damaged, spoiled, wasted, or anything of the sort where it wasn't able to be sold off to the customer. Realistically, though, in the real world, you're going to come across situations as such where the goods are damaged, they cannot be sold. We need to account for the costs of those items. So you have two different categories of spoilage. The first is called normal spoilage, the second is called abnormal spoilage. So here, in terms of your normal spoilage, this is spoilage that is anticipated during the production process. It is something that managers foresee will happen. And so, because of that, they do account for the cost of normal spoilage in the total production process. So, this is wastage that is anticipated. It does form part of the cost of the product. Then you have abnormal spoilage, and this is where literally the opposite to normal. It is not anticipated. It is then an additional loss to the business, and it's written off in the statement of comprehensive income. So you don't have to worry about how it's written off, just how to calculate it. So you will see on the next page that we're using an example to calculate your normal and your abnormal spoilage. It says to you, so we're looking at example 7.5 in your textbook. It says the following information refers to to completed job number ABX. Your direct material, direct labor, overhead summed up gives you your total manufacturing cost of 28,000 rand. Assume that normal spoilage for all jobs amounts to 2.5% of the units entering a production line. Now, that is important again. So, here they're telling you that your normal spoilage is anticipated and it's 2.5% of the units that are entering a production line, not 2.5% of a cost. So, here they said to you that the required material to complete 5,000 units. So this is your production, 5,000 units for the month was placed in production. The total spoilage was 175 units. So total spoilage is firstly calculated as a sum of normal and abnormal spoilage. So you're just simply adding up the two. So normal plus abnormal spoilage is your total spoilage, and they said to you here that this total spoilage is 175. So here we want to know what amount of this 175 units are normal in nature and have been accounted for, and then what is the cost of the abnormal spoilage. So here 5,000 units are being complete or going into production. And they said to you 2.5% of this is going to be your normal spoilage. So here, 5,000 times your 2.5% or times 0.025 is going to tell you 125 units are your normal spoilage. So then to calculate your abnormal spoilage, all you're going to do is say that it's 175 minus the 125, and this will give you your abnormal spoilage. So your abnormal is the 50 units, and we want to know what the cost of The 50 units would be the abnormal spoilage, and then what's the cost of the 125, which is your normal spoilage, and then what's the worth of the goods that were actually completed in normal condition that is able to be sold to the final customer. So to calculate the cost per unit as it currently stands, it's 28,000 Rand for the total cost of production. This is for 5,000 units, which they said to you here. So 28,000 divided by 5,000 tells you that the cost of one unit is 5 Rand 60. So here, what we're saying is of the total 5,000 units, we're going to split them. 150 of them was your normal spoilage. 50, oh sorry, not 150, 125 of them was your normal spoilage. 50 of them were your abnormal spoilage. And your normal completed finished goods that now can be sold to the customer, so finished goods, and can be sold would be the difference between the 5,000 and the 175 items that were damaged. So that would be 4,825. So here 4,825. So now we know what was completed can be sold, normal spoilage accounted for, abnormal spoilage not accounted for. The worth of each one of them is just taking the 5 Rand 60 and multiplying it by the number of units. So here times 5 Rand 60 times 5 Rand 60 here, and multiplied by 5 Rand 60 here. So the worth of them is 27,020 Rand worth of goods are ready to be sold to the customer. So 27,020 can be sold. Then you have your 700 Rand worth of normal spoilage, and then 280 Rand worth of abnormal spoilage. So that's all we're looking at in terms of your spoilage, normal and abnormal. Any questions here? Okay, so the last part is your ledger account for a job costing system. So the ledger accounts that we see here are literally identical to the ledger accounts that we saw in Learning Unit 6. So everything from your direct material, direct labor, overheads, work in process, your finished goods, cost of sales, trading account, profit and loss account, everything, indirect materials, everything exactly the same here. The only difference, literally the only difference, is that the name of the account is different. So instead of direct material ledger account, it's called material control account. Instead of direct labor account, it's called labor control account. Instead of your manufacturing overheads account, it's called factory overhead control account here at the top, as you can see. So literally everything is the same. The only difference is the names. Then for your work in process, it's called the same thing. For your finished goods, called the same thing. Cost of sales, called the same thing. So it's exactly the same. It's just that the names of the accounts are different here. So we're going to look at example 7.6 in your textbook for this, and we're going to just look at how the information is, and I'm going to actually skip to it in the slide. So let me just project it. Okay, so, well, okay, let's just work off it here. You can read in your textbook through this, and I'll follow in the slides. So here, example 7.6 in your textbook, page 197. Let's have a look at it. Sorry, guys, I got disconnected there for a second. Can you hear me? Okay, so let's continue. It's a new page 6. Okay, so here, giving you the information is entering it in the respective ledger accounts. So they said to you, and please follow for the question in your textbook, and you can look at the solution up on the screen. It says, Sia Zama Toolmaking operates a job costing system and keeps a set of books to record all their building projects. The details relating to each project are as follows, and they've given you balances for the 1st of March 2010. And here, these are all opening balances. Please make a note that these will be your work in process opening balances, exactly as we saw in most of the other examples we looked at with your ledger accounts, and also in the first part of this learning unit, most of the examples we did in that question we did before your break, where they give you the opening work in progress. So they've given you opening work in process, South Coast project, the North Coast project, and the Midlands project. So here it was 1560 for South Coast, 1575 for the North Coast, and 55230 for the Midlands. Then they said to you that the requisition for the material is 2020. So this is the material needed project, the North Coast projects, the Midlands project, and the municipal project. Now, what's important to note here is that they did not give you they did not give you a work in process opening balance for the municipal project. At the top, it didn't have an opening work in process opening balance. So please make note of that. Then they had said to you that this was the direct labor requirement for all of the projects. So they gave you, and it's again important to note here, and I did mention this to you yesterday when we were working with the other example within your textbook, that they gave you here the labor hours first, and then they gave you, sorry, I'm just trying to see if I can project this first. It would just make it easier to have the notes, to have the example up. Okay, so here we go. So as I was saying to you here, you're going to see that, sorry, I'm just looking for my pen. Okay, so here you're going to see that these were your opening balances for, well, opening balances for work in process for 3 projects, your South Coast, North Coast, and so these 3 work in process, and these were your opening balances. So again here, it was 3 projects that you had opening balances for work in process for, but here they mentioned 4 projects to you. So that meant that this project did not have an opening balance. Then in terms of your direct labor, they had given you the direct labor in rands, and this is what you will use for your direct labor cost. But then they also gave you the direct labor hours. Now, immediately, the moment you see that they have given you the direct labor hours, or even like we saw in the other example, the machine hours, there is a reason for it. They are giving it to you because it's most likely that you are going to use that to calculate your overheads. So look for this little bits of information that they will give to you, which are sort of hints telling you that this is going to be used to calculate your overheads. Then they said to you that the manufacturing overheads for March 2010 were 4,500 Rand paid by check. So this is telling you that these are the actual overheads for the month. So again, please make note of that here. So this was your actual overheads of 4,500. Then they said to you, overheads are absorbed at a rate of 15 Rand per direct labor hour. So that now confirmed what I was saying to you just now, that the reason they've given you the labor hours is because most likely your overheads is going to be calculated on the basis of these labor hours. So that has confirmed that this point has confirmed that. So it's 15 Rand per labor hour, which means to calculate your manufacturing overheads, your applied manufacturing overheads, it would be 60 times 15 Rand per hour, 30 times 15 Rand per hour, 70 times 15, and 20 times 15. So we now know how to calculate your applied overheads. And then they said to you, the South Coast project was completed and it was sold for 18,000 Rand. The Midlands project was sold for 65,000 Rand. The North Coast project was completed, but it was not yet sold. So let's break that down a little bit. Your South Coast project and your Midlands project were completed and they were both sold. So those would be going into the cost of sales account, and their sale prices of what was this, 18,000 and 65,000. Those would both make up the sales. The North Coast project was completed, but it was not sold. So this would just be in the finished goods account because it's not sold off, so it cannot go into cost of sales. Then the municipal project, they said to you, is incomplete. So this would be a work in process. So again, these little bits of information during your reading time, go through these questions and just highlight, point out anything that you can identify that will tell you whether, like you're seeing here, it's incomplete, it's complete, or whether it is used to calculate the applied overheads, whether there's a work in process, opening balance, and so on. So they had asked you to draw up a couple of accounts. So we're going to look at these accounts. So here, and I'm going to I'm going to skip between this and the slides where we have the ledger account, but you can also follow in your textbooks. So the first thing we're going to look at is your work in process account. They said to you the purpose of this example is twofold. Firstly, we will illustrate how the following accounts are completed in the ledger of Siazama projects on the 31st of March 2010. So here they said to you, draw up the work in process account for South Coast project, North Coast project, Midlands project. And on the next page, they say to you, do it for the municipal project as well, the overheads account, the finished goods account, the cost of goods sold account. So here, for your work in process, just before I skip to the actual ledger account, your work in process for the South Coast project, you have, and I'm just going to draw it up roughly here. So work in process for the South Coast project, but you can look at it in your in your textbook. You would have an opening balance of 1560. This would be your opening balance. Then you're going to, exactly as we had done with a normal ledger account for work in process, you're going to allocate the direct material for that specific account. So you will say direct material, 720,000 Rand, 720 Rand. Then for your labor, which came from here, it's going to be the 900 Rand for the South Coast project. So direct labor. And then your overheads, we said here for South Coast is going to be 60 hours multiplied by 15 Rand an hour. So this would be your manufacturing overheads. So the only difference is that instead of naming it direct material, it would be material control, or you can say direct material control. So I'm just going to say DMC here and DLC and manufacturing overhead control. So just include the word control as opposed to what we had done in Learning Unit 6. So that is the ledger account on the debit side for your work in process for the South Coast project. On the credit side, because the South Coast project was completed and it was sold, so here in point F, the entire amount is closed off to the finished goods account. So this would be the total of the debit side, which is 4080. As you can see, they did the normal total here and so on, and here, and that entire amount is closed off to your finished goods account. So that is your work in process for the South Coast project. For the North Coast project, which is next, exactly the same thing will happen. So it's just the amounts are going to differ. So I'm just going to do it roughly here because you can see where the information is coming from instead of me skipping between slides. This just would make it easier for you to see as well. So here for the North Coast project, it is going to be an opening balance of 1575 that came from here. So this account does have an opening balance. Remember, it's not always going to be such that every project has an opening balance. So here it was 1575, your material was 420, your labor was 675, your overheads would have been 30 times 15, which is 450, and the entire amount is then closed off again to the finished goods because the North Coast project was complete. So it's going to go to finished goods, but it's just not sold. So it won't go to cost of sales as well. So this is now going to be, so in the finished goods account, it's going to be a total of 3,120 Rand, and that is the amount that is closed off to finished goods. So that's your North Coast project. And then it's the same for your Midlands and your municipal projects. So here for your Midlands project, your opening balance is going to be the 55,230, which is quite significantly higher than the other two. So here 55,230 is your, so this is the Midlands project now. So here within brackets, it's going to say for the Midlands project. So 55,230 is the opening balance, the material 1350, the labor 1890, and the overheads is 70 times 15, which is 1050. The entire Midlands project is closed off to the finished goods account because we saw here in point F that it is completed and it is sold for 65,000 Rand. So this amount then on the debit side, on the credit side is going to be 59 to 50. The entire amount, remember, is closed off to your finished goods account. Okay, so that's your Midlands project. And then the last one now is your municipal project. So with the municipal project, there is no opening and closing balance for this account. Sorry, there is no opening balance for this account because they didn't mention one to you. So you'll ignore the opening balance and it will just be the direct material, the direct labor, the manufacturing overhead control accounts. So here, your direct material is going to be the 1.8. The labor is 455. The overhead is 20 times 15, which is 300. That totaled up is 2,555. Remember, this is the municipal project. And they said to you that the municipal project in point H here is incomplete. So this will remain in this account because this is the work in process account. So instead of saying finished goods, where it will be closed off to, it will remain as a balance in this account, and it's 2,555. Okay, any questions so far in terms of those ledger accounts? Okay, so the next account we're looking at is the manufacturing overheads account. Now, the manufacturing overheads account is going to have all of these that we had. If you look at the one I'm circling, all of those manufacturing overhead amounts that we had debited to the work in process, it would have been credited in the overheads account. And here we're just going to have one overhead account to account for all of the different projects, and we're going to use this account to determine whether there was an under or an over allocation. So here we had calculated. So remember this bit here. So I'm just going to delete everything here and clear that. So remember when we multiplied by 15 here, and let me put the 15 at the beginning. So times 15 here, 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 and here, we got two answers of, for the first one it was 900, for the second one 450, then 1050, and now 300. So those amounts are now going to go into the manufacturing overheads account, control account, and it is generally credited to work in process. So I'm going to write out work in process here. And because we're, instead of doing 4 different overhead accounts and closing each of them after work in process, we can just do one overhead account. And you will say that this was for the South Coast project. It was 900 Rand. That was the first amount here. Then the North Coast project within brackets, that was 450 Rand. Then the Midlands project, so I'll say ML for Midlands, and that was 1050. And then the last one was the municipal project, so I'll just say M for municipal, and that was 300 Rand. So now you're going to look at what the difference between this total of these overheads are. So when you sum up the 900, the 450, the 1050, and the 300, that gives you a total of 2,700. So that's basically adding up the total on the credit side. Now you're going to compare that total of 2,700 Rand, which is your applied manufacturing overhead. So applied, I'm writing it at the bottom here, versus actual, what we did just now as well. The applied is 2,700 Rand, and they said to us under this point here, they said to you manufacturing overheads for March was 4,500 Rand paid by check. So this was the actual overheads of 4,500 Rand. So you're going to put this onto the debit side and say that we are going to have to pay for this by check to the bank account. So 4,500 Rand is the amount. The difference between the two, which is 1,800 Rand, is now going to be an additional expense to the business. So the total of 45 is written here and here. The 1,800 Rand is going to be debited to the cost of sales account. So this is the same thing we saw in Learning Unit 6, where we said that if the actual, which in this case is greater than the applied, that means we only allocated 2,700 Rand to overheads, but overheads ended up being much higher at 4,500 Rand. So the difference between the two, which is 1,800, means that we had under costed or under allocated too little for your overheads. Meanwhile, it ended up being much higher. So this 1,800 Rand, whenever it's under costed, you will debit the cost of sales account and you will credit the manufacturing overheads account. So now we are crediting the manufacturing overheads account here by saying cost of sales, which is a name of the other account, and it's 1,800 Rand. That means in the cost of sales account, we will be debiting it with the 1,800 Rand as well. So here we've done your manufacturing overheads cost control account. Now for your finished goods control account. So your finished goods control account is now going to only be looking at all of the goods that were completed and now potentially are going to be sold. So for your finished goods control account, it would be from the work in process. There were only 3 projects that were completed. They were from this point, the South Coast project. So I'm going here, South. The North Coast project as well was completed. Here they said to you, and also the Midlands project. So I'm just going to say ML. So here from the work in process account, on the credit side of the work in account, for the South Coast projects, it was 4,080 Rand. That was here. For the North Coast project, it was 3,000. For project, it was 59,200, sorry, 520. So this is your finished goods account. So we're going to total it here. And whatever is sold off is going to be closed off to the cost of sales or the cost of goods sold account. Whatever is not sold off will remain in this account as the closing balance. So in total, it was 66,720 on the credit side, sorry, on the debit side and the credit side. And now between these 3 projects, they said to us specifically that the South Coast project was completed and it was sold, and the Midlands project was also sold. So those are the only 2 projects that are sold, which will go to cost of sales. The North Coast project was completed, but it was not sold. So if it was completed, but it was not sold, remain in the finished goods, is not going to go to the cost of sales like. So these 2 then, the 4080 and the 59520 added up is what will be closed up to the finished, to the cost of sales account. That's 63,100. The North Coast project will remain in this account as the 3120. So this then in the next period will be sold, so that 3120 becomes the opening balance for the next month, which in this case is the month of April. So this is your finished goods account. Then the next account is the cost of sales account itself. So you're going to have the 63,600 together with that under allocation where we credited overheads for the 1,800. We need to now debit the cost of sales account with this amount. So the 63,600 and the 1,800 needs to now be shown. Oh gosh, it just disappeared. 63,600 and the 1,800 Rand needs to be on the debit side of the cost of goods sold account. You can look at it. Okay, now I can write it. So here, that is your cost of goods sold. From your finished goods account, you have the 63,600, and then from the under application or under costing, which was in the in the manufacturing overheads control account, it was the 1,800. Would generally be closed off to the trade. Our total is 65,400, but we aren't trading account here, so you don't worry about that. And then the last thing they wanted you to do was calculate the gross profit. So to calculate the gross profit, remember it is sales less your cost of sales, and will give you your gross profit. So here your sales is from the projects, the Midlands project, was the South Coast project being the mid project being sold for 65,000 rand. So you can look here, look at your textbook as well. Plus 60 out of that gave you a total sales figure of 83. Then your cost of sales was this total of 65,400 from the cost of sales account. So your gross profit then is 17,600. Okay, so that is it for Learning Unit 7 and for the module as a whole. Are there any questions? Okay, so I'm assuming there are no questions then. Let me stop the recording.